Hello everyone, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts and market structure 101. So let's get started. As you can see for today, I've picked GRT, the graph, but you can request any instrument, any asset in the comment section below. We've done previously a commodity, a forex pair, a stock, and so on. So this applies on any asset on any time frame, as you will notice. Of course, we have our baby RichTL on the chart to make our analysis in an objective manner, as you will see in a bit. So we start from the higher time frames like weekly and monthly to get a feeling about the overall market. Are we bullish, bearish, within a range, just to know where we are, because half of the work is done here on the higher time frames, because once we know where we are, you can now know what to look for on lower time frames. I usually consider M30 and H1 as our trigger timeframes, and H4 and daily for structure, or to make more sense of the chart from a macro view to the trigger time frame. So let's do it. On weekly time frame, we have been overall bullish, as you clearly notice on this particular one. We have been making higher lows and higher highs. So we want to engulf this overall bullish movement. Sometimes it's a channel, a parallel one. Sometimes it's a wedge pattern. In this particular case, as you can see, it's a rising broadening wedge. It's a flat one, but you will clearly notice that it has been headed upward for a long period of time, especially after rejecting the 5 round number right there. They just needed to the point. That's it. And we have been pushing lower since then as a big correction phase. The nature of this pattern is the bigger the impulse, the bigger the correction, right? Because it's a widening one, it's a broadening one, as its name implies. Big impulse, bigger correction, bigger impulse, bigger correction, and so on. So now we're expecting a movement towards the 0.6 or even 0.65. But this is, of course, from a long-term perspective. Meanwhile, we are on a correction phase. So we want to locate an area from a long-term perspective to catch this big impulse movement upward. But let's take it step by step, right? Previously, we had this previous resistance, multiple rejections here, broken upward and turned into a support zone. So this is a very important area, which lines up with the round number 1.5. And even down there, we have the 1 round number lining up with this demand zone. But this area here is a very strong area, as you can notice. Previously resistance and now turned support, which is also the previous objective major high. Also, we got the objective lows right there, which we drew this trend line from, and this one up there, as you clearly notice. So we are overall bullish. That's what we know from weekly time frame. Currently in a correction phase, looking for any indication that the bulls are taking over long term to catch this big impulse movement. Let's make them appear on lower time frames as usual. Perfect. Daily time frame, you can clearly see the bearish correction movement in action. But previously, as you notice here, we have been bearish. We broke above, let me show you, this previous major high. That's it. We broke it upward and we have been bullish since then. We failed to break below these wicks of this objective low. We kept on pushing higher, and here we go. We had an impulse correction, a big impulse, and then that's it. The bears took over here. We had the impulse correction, and we have been bearish all the way since the 0.5, as mentioned from weekly time frame. This is how simple it is and how objective. Bulls took over, bears failed to take over, the bulls are still in control, bears take over, and now we are bearish, making lower lows and lower highs. That's it. And lately, we can see that we have been trading within this big wedge pattern, and that's it, just by connecting the dots, as you clearly notice. And this is, let's go for red to change the color. But lately, we have broken above this high. So we failed to break a high for a long period of time, and then we broke it upwards. So now we can clearly notice that we are now in a bullish market. We have been bearish previously, but now the momentum has been shifted from bearish to bullish. This is what we want to know from a market structure perspective from daily and H4. We'll zoom in, of course, H4 in a bit, but just want to show you that after this high has been broken, we are now bullish. So let's draw something that engulfs this rising channel. And that's it, this bullish trend, which is in the shape of a rising channel. We had our impulse, a correction, impulse, and we are currently in this correction phase, which makes us look for trend following buy setups here from a short-term perspective. So, of course, long-term, we are looking for this big macro movement. But meanwhile, since we turned bullish already and we are currently in this correction phase from daily time frame, we'll be looking for buy stops here on lower time. Let's make this one appear on lower time frames. Perfect. If you zoom into H4 time frame, this is it. Within this, if you want, rising channel, we have been trading higher, pushing lower, trading higher again after this head and shoulders was formed, the inverse one, and then after breaking below these lows, we have been bearish. So we're following the same logic while waiting for something here to form, and then we'll be buying definitely on its break upward and targeting the upper bound of the channel right there. This is of course, how the plan for now. So that's it. Previously broke the high, have been pushing higher, and then broke the low. We have been bearish since then, and then broke the high. We have been bullish, and then here we go. This is it. Let's delete everything, and perfect. So we are currently in this correction phase within this big rising channel. So of course, we'll be looking for trend following buy stops here. And as you can see, I have my alerts already as we approach this, looking for a buy. If we break above a high, which we'll show you in a bit, we'll be buying this one starting from here. So from weekly, we are bullish around the lower bounds of this rising broadening wedge. From daily, we're in a correction phase previously, and now we are turning bullish and we are making higher lows and higher highs, currently in a correction, looking for this to buy short term, as I mentioned previously. H4 time frame, we saw the market structure in action, bullish, bearish, bullish, bearish, and we are currently looking for something like this. This is a summary. On H1 time frame, we are currently forming an objective high, and so for the bullish to take over, we need to see a break above this high. Once we have the break, we'll be expecting this short-term bullish movement. Meanwhile, of course, the bears are in control. We are still making lower lows and lower highs, and we can still make new low lows and lower highs. In this case, we'll be adjusting our neckline, and we'll be waiting for this new last high to be broken upward in order for us to buy. That's why I have my alert right there. Because if this is broken upward, I'll be going for the long. Meanwhile, let's wait for this to happen, locate a new neckline, and then we'll be buying on break upward. It depends on you. I will not dig deeper into risk management for now. I mean, I might make a new video about it, dedicated for risk management, but it depends on you if you want to go for spot trading, for futures, or trading on margin. I will not dig deeper, but as a quick one, if you want to go for the stop loss, which would be below the previous low, and target at least 1 to 2 hours to have an edge over the market from a risk management perspective. Meanwhile, long story short, around the low band of this daily channel, wait for this to go long or wait for new high to update your neckline and then buy on break upward. This is the preferred scenario, but breaking above this one is also fine. Best of luck, and I'll see you hopefully on the next episode.